Hey, it's Andreas, and it's time to talk about the European version of California here in terms of taxation. Now, Denmark is the greatest nation on earth in terms of collecting tax from its citizens, and the way they're doing it is actually quite smart. When I take a look at the tax code, I don't really find any ways around to find smart and easy ways to pay less in taxes. Now, if we take a look at the base level of taxation for just income in Denmark, we see that you're taxed 56% on your income if you're a high earner. That means that you're paying, the government more in taxes than you take home yourself at the end of the day. So the tax rate is extremely high to begin with. And one of the ways that you can get around taxes in neighboring countries such as Sweden is that you set up a corporation and then you use this corporation to bill your customers, clients, the corporation that you work for. So you're basically a consultant for the company and you're not employed directly. And then you pay yourself a small salary to get social benefits, and then the rest of those money that you earn you pay out as dividends, and then you're taxed at 30% on capital in Sweden rather than 50 something percent. So that's a great and smart way to get around taxes if you're Swedish. However, in Denmark, they used their big tax collecting brains and said, hey, we're going to tax capital gains at 50% for everything above 57,200 Danish kroner. So if you just have some small trading going on and you make some small wins, then you only get taxed at 27%. But then if you try to set up a corporation to get your dividend paid out and get a lower tax rate that way, well, tough luck, you're going to be taxed at 50%, and shaving off those small percentages is not really worth it in most cases. And they also have the exit tax that Americans will be familiar from, California, seeing that when you leave California, you will be taxed on capital. So even if you haven't sold any shares, when you move state lines, they will consider it a realization event, meaning that if you have any capital gains, you will be taxed on it. And Denmark do the same thing. If you have shares over 100,000 Danish kroner, that's 13,500 euros circa. So if you live in Denmark and you save in shares and you build up a big nest egg and then have this idea that you want to move to Spain, Portugal, South America, Southeast Asia, so you move there, well, tough luck. Then the government's going to take 50% of all the capital gains from your nest egg. So let's say that you put in 300,000, you made capital gains of 700,000, then they're going to take 350,000 of those gains. And this goes for people investing in crypto as well. So if you're hoping to be able to leave the country with when some crypto moons, be aware of this exit tax, because Denmark is the masters of tax collection in Europe, and they're really, really good at collecting revenue from citizens, as they have the highest tax collection revenue per capita in the whole world. So as always, hope you make a ton of money, whatever investments you decide to do. Take care now. Bye bye.